So if they do that, then any number of analysts are quickly going to do the math and say, well, if China has 10,000 tons, that means the U.S. doesn't have 8,000 tons.
Hello there, my friends. Chris Marcus here with you for Arcadia Economics. And today, joined by a new guest, his first time on the show, although you guys are probably well familiar with Nick Barisheff of the BMG Group, longtime expert in the gold and silver markets, very well familiar with a lot of the things that are going on. So, Nick, it's a pleasure to have you on in here today. And thanks for joining me and making some time. How's everything going with you?
Oh, my pleasure. Thanks for inviting me.
Yeah, well, it's certainly an interesting time. I guess it's always an interesting time in the markets, but especially now where I think a lot of the people watching the show get it that things aren't clean like we were told growing up, or what I thought when I was in college or Wharton MBA and thinking we have rational markets and all that. So perhaps to start off the question, you and I talked about a little bit before we hit record. When do you think the manipulation is going to end? How much longer can this go on?
Well, I think that it's very difficult to predict a precise date, but when it does end, then it's going to end in major catastrophe. Like we probably have, sooner or later going to have a default on the comics, and that will end it. It's ending to a certain extent. It's pretty common knowledge that Scotiabank, that they were the biggest bullion dealer, and Scotia Makata has been around for hundreds of years, and they decided to pack it in and get out of the business. Now Scotia, reason we used them for the last 20 years is that they did about 4 times the total bullion volume as the other 5 Canadian banks combined. Like It was no contest. And these people are getting out of the business. So I think that's partially due to the fact they recently paid a big fine, and there's probably more to come. So that's one of the factors, and eventually it's just not sustainable. You can't have 100 paper contracts for every ounce of gold, on the COMEX, and sooner or later blows up. And it happened to a certain degree in platinum, I think in 1998, where they couldn't make the deliveries. So when that happens, the manipulation ends and the price skyrockets just for that reason alone. But we've got a lot of other reasons for the price to skyrocket other than the manipulation.
Yeah.
But a lot of people, I get the question sometimes, well, there's no point investing in gold or silver because it's manipulated. Well, I'm sorry to disagree, but the thing is that if you look at the performance of gold in all currencies for the past 20 years, the average in all currencies is about 10% a year. So even with manipulation, that's not all that bad.
Yep.
Yeah.
Yeah, and especially, it's funny you mentioned that because I've calculated the gold return since the last time this paper system failed in the London Gold Pool back in the late 60s.
Right.
I think it's up maybe a little bit less with an 1850-ish gold price, but it was up like 55x. So, we'll factor that in. Although, back to the COMEX, perhaps put in other words, is there any other outcome you see possible besides an eventual failure of the COMEX?
Well, but you see, there's multiple avenues of manipulation. It's not just the COMEX, okay?
Right.
One of the things that inspired me in the beginning to get into the business was the book that Frank Veneruso wrote in 1998. It was the most expensive book I bought because it was really a report, but it was a $900 book.
Yeah.
So, but at the time, out of the 33,000 tons of central bank gold, in 1998, he estimated that there was something like 8,000 tons, if I remember correctly, that was out on lease. He then kind of updated the projection in 2002, and the conclusion was 16,000 tons, which is half the central bank gold.
Yeah.
Now, the bizarre kind of non sequitur in leasing is the fact that when a central bank leases gold, they can sell it and it can be turned into jewelry or disappear into China or whatever the case may be. And when it comes to return it, they don't have to return the same bar. They just have to return an equal London good delivery bar. So that's like you leasing a BMW, and as long as it's a black BMW, you can give it back to the leasing company. You don't have to return the one you leased in the first place. So that's bizarre. So that's a major factor in the manipulation, because the bullion goes from the leased by the bullion bank, and let's say for ease of arithmetic at a half a point, they then sell it. Could be to a hedge fund, it could be to China, and so then they have a liability to the central bank, but they don't have the gold. It's like doing a naked short, okay? Which can be very lucrative and it can be very dangerous. But that's essentially what happens. Recent times, most of the gold has ended up in China. So China's central bank reports that it has 1,600 tons of gold, and based on the imports and so on, many analysts have looked at it and believe they have north of 6,000 tons. Now, the thing is, how did they get that?
Over on that one.
Yeah, because if you look at the statistics compiled by GFMS and CPM, they have accounted for every fractional ounce of gold, but they haven't accounted for any leasing, because nobody knows the exact numbers. So that's what's been going on. So the central banks that think they have 33,000 tons, and in fact, report that they have 33,000 tons on their balance sheet, but they have 16,000 tons and 16,000 tons worth of IOUs from different bullion banks, particularly like JP Morgan and Goldman Sachs. So that's a big difference. In the gold that ends up in China, I can assure you, isn't coming back.
Yeah.
Okay. The problem is going to be that part of the manipulation that's going to be very exasperates everything, is that if China, when they're ready and they think they've got enough gold, which they have publicly stated is 10,000 tons, because they want more than the US. If they ever come out and say, oh, by the way, we have 10,000 tons because we have been buying gold in our sovereign wealth fund for the last 20 years, and we don't have to report that to anybody. And we just have to transfer it from the sovereign wealth fund to the central bank, and voila, we have 10,000 tons. So if they do that, then any number of analysts are quickly going to do the math and say, well, if China has 10,000 tons, that means the US doesn't have 8,000 tons. Then watch the dollar tank. So that's one big issue. The final issue, which is a recent one, is basically the ETFs. I've spoken to a lot of people. They think ETFs are just like an open-end mutual fund, nothing remotely similar to an open-end mutual fund. Like in our funds, which are open-end mutual funds, money comes in, we we buy gold or silver or platinum depending on the fund, and that's that. It's that simple. The ETFs have authorized participants that contribute a basket to the ETF. So the question is, where did they get the basket from? Well, they leased it. Okay. A Goldman Sachs isn't going to go in the market, buy a bar of gold at spot price, contribute it to the ETF at net asset value, get shares of the ETF at net asset value and sell those to the public, because there's no money in it. That's not what they do. They borrow the gold from a central bank, contribute it to the ETF. Title to the gold remains with the central bank, but it's parked for show at the ETF. They then get ETF shares, sell that to the public, and keep all of the money. Hell of a deal. You borrow gold at a half a point and get to keep all of the money. So, but the problem becomes, which nearly happened with Lehman Brothers, is that if an authorized participant goes bankrupt or becomes insolvent and so on, the central bank just knocks on the door of the ETF and says, here's our lease agreement, please send the gold back to our vault. Because title remained with the central bank. That's why they can put it on their balance sheet, because technically it's still theirs, even they don't have physical possession of it.
Yep.
So there's quite a few mechanisms of manipulation, but all of those are fraught with enormous problems. And if any one of them pops, then all of them will pop.
Yeah, it would sure seem that way. And well, I have a question. We'll come back to that one, although you had a bunch of interesting points there. And I have a few follow-up questions, shall we say. Number one, you mentioned gold leasing and China wanting to have more gold than the US. Would China have more gold than the US if they had 1 ounce of gold?
Well, that's quite possible, because the thing is, the 8,000 tons is what the US purports it has.
Yeah.
So the thing is, if you take Frank Van Russo's numbers from 2002, they'd be lucky if they had 4,000 tons. And the proof of that was when Germany asked for the repatriation of their gold. Well, if they actually had it, that could be easily put on one 747 plane and shipped back to Germany. But it took a number of years to do it. And the bars that Germany got was not the original ones they put in custody.
Yeah, it was incredible. I remember when the U.S. responded by saying they'd give them 10% of their gold over 7 years.
That's right.
I mean, it's like, what are people supposed to think when they hear that? So
that's the issue. But you see that a lot of the central banks don't have the gold that they report that they have. So that's a mechanism. This leasing of gold from central banks is something that is totally not transparent. There's no data. Nobody has access to it. There's a lot of hypotheses about it, but nothing conclusive.
Yeah, which is one of the frustrating or sometimes fun parts of gold and silver, where as I've studied it years now, realize more and more we really don't, like, all these numbers, supply, demand, I mean, they're guesses at best. You look at some of the groups we get the numbers from, which we'll leave nameless, but don't inspire me with confidence always. Although one thing that you mentioned earlier, Nick, perhaps you could add a little color to that, also throw in silver. How many, for each ounce of gold and silver, physical gold and silver that's out there, how many paper claims do you think are on it?
Well, the numbers I've seen, and it wouldn't surprise me, is something like 100 to 1.
Yep.
You know, and this is in a way like fractional banking. You know, when you look at how much money the bank actually had to meet the deposits, you know, wouldn't be anywhere near enough if everybody asked for their money back. Well, it wouldn't even be close to everybody wanting it, but it's the same kind of thing. So as long as everything is normal, everything appears to be normal. But you get a little bit of of fright and concern and everything, and people say, "Well, I think I'd take some money out," and then in a short time, the bank's got a big problem. So that's the same kind of issue, and this is where we've been very careful, because when you give your money to the bank, it's not held in trust or anything like that. Because you give it to them, it becomes their money, and they give you an IOU. Okay. What's important with gold, when a lot of people don't make the difference, is that the custody agreement is totally different than an account agreement, with a bank. The custody says it's your gold. They can't do anything with it. Doesn't form part of their assets, and you can do with it what you want, whenever you want, so on. So when you dig down in a lot of instances where they have custody for the gold, it's a very flawed custody agreement.
Yeah, especially when you have some of these ETFs like HSBC and JP Morgan as the custodian. Maybe we could just give them a fox mask, put it down on the executives' heads, and let them guard the hen house. Nick, you mentioned that, I guess, like many folks, including myself, have said as well, that it's hard to know the exact timing. But I mean, let's say when this finally does happen, I know it's equally impossible to put an exact number on it, but can you even give us the scope of what?
Yeah, but see, I've looked at it and say, okay, when the manipulation ends, then you get a big bonus. But in the meantime, gold's outperformed every other class. Silver outperforms gold. So relax, just enjoy the ride. And when the manipulation stops, you'll have a big bonus. It's not dependent on the manipulation stopping to make an investment in it.
Yeah. Yeah, and especially I like what you point out there, just learning to enjoy the process. I've certainly had my days where I see the price smash and I get all cranky and everything. Yet something that this year I'm happy about is learned to change that, where, hey, it's like a Black Friday sale. Let's not complain that it's on sale. And
yeah. No, yeah, exactly. So, like, we're trying to work with some pension funds. We've successfully sold one, and the thing is, the pension funds target like a 6% return typically, and most of the time don't get it, and that's why they've got huge unfunded liabilities. And there's 4 pension funds in the world that have gold, none have silver. So you think, well, wait a minute, gold gives you 10%, it's negatively correlated, it'll protect the rest of the portfolio. So what else is there to think about? You don't have to worry about the manipulation in the macro picture. It's 10%, okay, already.
Yeah, and especially with that macro picture, we see people still use that Wall Street catch buzz phrase of the treasury being the flight to quality, flight to safety. Now, last I checked, the yield on the 10-year was below 1%. The Fed had a 2% inflation mandate, which they're now targeting. God on earth knows what actually that means. But I mean, is there a bigger myth in the world, not even just in finance, but in any sphere of thinking, than the treasury being the safe haven? And what should investors know about that?
Well, I mean, the treasury is anything but a safe haven, because if you compare currencies, right, you can compare them 2 ways. One is you value them against each other. How are they performing against each other? And then you value them according to purchasing power. And all currencies are totally miserable in purchasing power. The US dollar has lost like 90% of its value since '71.
Yeah.
So it's a complete failure there. So it's hardly a safe haven. But the other part of it is that um, the the Bureau of Labor Statistics is bullshitting the inflation rate. That's big gold gives you a more honest inflation rate. That's why it's 10%. According to John Williams of Shadow Stats, the inflation rate's real 8 or 9%.
No.
And that's just using the old methodology. He didn't reinvent the methodology. He's just using the more accurate methodology from like 10 or 15 years ago. Um, and anybody, that shops and so on knows the inflation rate's not 2%, but it's manipulated in a number of, areas. So people are diluted. So, there's very few investments. Normally you make an investment so that you park your money so that when you need the money in the future, it'll have the same purchasing power. So in order to do that, the return needs to be above the true inflation rate.
Right.
Or you're not going to have enough money to buy whatever you want in the future. And there's very few investments, with rare exception, that are outperforming the true inflation rate.
Yeah. Well, don't tell that to Wall Street. That's not the kind of thing they like to do over there.
Exactly.
Although, Nick, last question I have for you today that I think would be relevant for people who are out there wondering, is it manipulated? Is it going to end? Can you tell folks what happened with the London gold pool? Because I'm guessing that there's a lot of people who are into gold and silver today that have never heard of that before. It seems to me at least a good template of how this could unfold. Could you share any insight on that?
Well, but it was basically the major Western countries got together and wanted to keep the gold price down. Like when Nixon decoupled the dollar from gold, the price of gold was $35 an ounce, and they tried to keep it close to that. So as the demand started going up, they had to sell more and more gold. And the U.S. had, like, before the London gold pool had 22,000 tons. Now they got 8. That's how much they had to sell to suppress the price. They'd be a lot better shape if they didn't try that, with 22,000 tons.
Yep.
So it was a complete failure. And anytime manipulation, it's always ended up in this kind of massive failure. You can't keep it down.
Yeah, and I appreciate you mentioning that because, again, I've been there. I get it. I understand in today's culture where things get shorter and shorter attention span, people wonder if it hasn't happened yet. Is it going to? But yeah, exactly. And it was also interesting. You had that unravel in 1971, and then I believe they cooked up these COMEX futures. I think it was 1974. Does that sound right?
Yeah, they just made it more subtle.
Yeah, so it's like one scheme to another. And for everyone who's watching today, if they're frustrated, the price is down or whatever, I think that's a good example to look back to, because you see, the farther you take a step back, the farther you can see how these things go, how they've played out time and time before, and why, at least I think it's reasonable that they'll play out this way again. So, Nick, I appreciate you sharing all that. And perhaps just in wrapping up, you can let folks know where they can find you and some of the products and services you offer.
Well, our website is bmg-group.com. And we have basically 2 product lines. One is mutual funds. The first mutual fund is a gold, silver, platinum mutual fund. Next one is a gold only, and next one is a silver only. These are open-end mutual funds that, we don't hedge it, we don't lease it, we don't market time. You decide when to buy, when to sell, and we just make it happen. Every dollar of investment is converted into physical bullion. So there isn't any kind of paper conflicts of any sort at all. And like I say, we needed 6 exemptions when we set them up because I wanted the mutual fund investment to qualify for registered retirement accounts, but at the same time not compromise any of the attributes of bullion. First attribute was liquidity. So our liquidity isn't dependent on how many shares trade a day, like a closed-end fund or an ETF. Our liquidity is simply the bullion markets themselves, because we buy and sell to and from the bullion markets. So our liquidity is essentially the same as the bullion markets. Then for high net worth investors and some family offices, we also sell physical bullion, and it's typically stored with Brinks in a number of locations around the world. So those are the 2 distinct product lines. They're very, kind of simple concepts because we don't mess around with the bullion. The unit holder simply decides when to buy and when to sell. That's the end of it. We just make sure it happens. That's all.
Yeah, so Nick, would I be correct in saying that it seems like you've modeled your storage, segregation, strategy, and integrity policies basically the exact opposite of the US government and any central bank or gold trading?
Yeah, that's a good way to put it. Well,
Yeah.
it's the way it used to be under the gold standard, like pre-1933. You could take your paper currencies and they'd give you gold coins in exchange. So that all ended in 33 for citizens and 71 for everybody.
Yeah, well, I appreciate that. I appreciate that there are good people out there doing good things. My time on Wall Street, I left because I saw a lot of the shenanigans we discussed, but appreciate you joining me here, giving folks a safe place to go for some of these needs, and we'll look forward to catching up again soon.
My pleasure.